Good morning, everyone, and welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the MegaETH ICO market, the Hyperliquid market, the NFT market, how to make some or a lot of money on the internet. Loaded up for discussion today, we have total US debt crossing $38 trillion for the first time. Most rapid debt growth since COVID. Definitely want to get into that and see what that means and what we think that means for the US economy in general. MegaETH publishing the ICO details. There's quite a lot to break down on that. Probably also going to talk about that again tomorrow when we're going to have Brett on the show again as well. And last but not least, A16Z publishing a state of crypto report highlighting industry maturation, some interesting stats around stablecoins. Definitely want to get into that because I think it's a fascinating read packed with quite good statistics. We also got the latest on price action on crypto NFTs, so stay tuned for that as well. I got Phunky with me in the co-host seat. We're almost ready to get into it. But before we do that, just a reminder, friends, that nothing that we say here is financial advice. This market is extremely risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Phunky, welcome to the show. Welcome to the stage. How are you doing on this Wednesday?
GM, my friend, I am doing quite well. Just came back from El Salvador and first time being there. Incredible country, incredible people. What a trip. Yeah, I'm just looking forward to being co-host today on the show and hope everybody's enjoying the stash before it disappears.
What did you do in El Salvador?
So we went down there. Partly is Global Stake has been working with a company there for a little over a year now, and they're working on doing tokenization of certificates of deposit because in the country that's the biggest savings vehicle. And so trying to bring that on chain to just increase liquidity, allow people to borrow against that as collateral. As you can imagine, they literally still sign physical papers of certificate when you go to a bank and you
Wow.
deposit your funds. And of course, with the digital asset laws that have been brought in since President Bukele came to power 6 years ago, they're trying to make this sort of an innovation hub. He said it's not going to be the next Singapore, but we want El Salvador to become the Panama of digital assets. So we're going to have sort of this international flow passing through there as sort of like the Panama Canal. But so there's a lot happening in the country. They're really building up their infrastructure. You can see a lot of new building happening. There's a JW Marriott that's going on, being built up in San Salvador. But spent a lot of time with the team, introduced me to many important people. I had breakfast with an important senator the last day I was there. He's on the Commission for Technology and Innovation, as well as Treasury and special investments. So yeah, met a lot of very powerful people. We toured a data center. So Global Stake, we're thinking about deploying somewhere in LATAM. So I toured a brand new data center. It was just opened in July of 2024. Really incredible state-of-the-art facility. So a lot of impressive things happening there.
Very, very interesting. Also very fascinating how El Salvador has seen like a massive turnaround over the last couple of years in terms of like innovation friendliness, in terms of like safety. This country is really going through some incredible change at the moment.
I would just forewarn everybody about the traffic. There are 6 million people in El Salvador. If you haven't looked at a map in a long time, it's a very small country, and 2 million of them live just in San Salvador. Even my friend who kind of hosted me, it just, as an older fellow, I sort of appreciated the history of his house. He lives way up in the hills, and apparently his dad bought this stuff for a song when the guerrillas controlled it. And his dad was instrumental in bringing peace to the region because throughout the 80s into the early 90s, Honduras, Guatemala, Nicaragua, and El Salvador were always at each other's throats. And he had pictures on the wall in his office of like him standing in the Oval Office with George Herbert Walker Bush. He had letters. He basically single-handedly, I guess, negotiated with the guerrilla fighters, the leaders of these organizations in the very early 90s, and brought peace to the region. So yeah, it was quite the trip. Very memorable. Can't wait to go back.
Fascinating, and I love stories like that. We got a ton of things to get into, but before we get into the price action, Shout out to our partner Beezie. This show is sponsored by Beezie, the on-chain claw machine, innovating how collectors chase the next grail. Beezie lets you pull everything from PSA-graded Charizards to Labubu figures, Travis Scott Jordans, and sealed products, all securely vaulted with Brinks, tokenized on-chain, and shipped worldwide. Whether you're after rare Pokemon slabs or battling your way up the leaderboard to farm and airdrop through pull, swaps, and trades, Beezie makes collecting on-chain fun. We will have a little giveaway towards the end of the show for the OpenSea, or for some of the OpenSea claw vouchers, which we are sitting on. We'll do that, yeah, in the last couple of minutes of the show. So more on that later. But let's get you up to speed. We have a wheel of names again. I love the wheel of names ever since we've been doing the Yeet giveaways. So I will have something to spin, and that means Legendary is happy. But let's get you up to speed with the price action. As usual, starting with the majors first. It's a bit of a green day. Didn't start out as one. We have BTC being up 1.5% at 109.5K. We have ETH being up a touch more than 1% at almost 3.9K. BNB up almost 4%, 1.1K. Solana up 2.5%, 188 US dollars. A big winner of the day is Hyperliquid. That is to do with some news, which we'll get into in a bit. Hyperliquid is up 12% though, $39. So definitely beautiful recovery. And last but not least, checking in with Sui as well. Sui being up 2.5% at $2.46. Getting to the meme coin side of things to see how things look on that side. Green Day as well. Dogecoin is up 2.5%. SHIB up 1.6. Pepe up 1.8. Pudgy's down 1% at 2 cents right now. SPX Mort's coin down 1%. Phunky up 2. So most of the things scrolling through that are like either up 1-2% or down a couple percent, with some outliers like Useless Coin being down 7% on the day. But nothing standing out too much on that side of the price action. Just quickly also recapping the main headlines again. As we said, we're going to talk about the US debt, about like a potential recession in 2026 and where the US economy might be headed. We'll definitely dissect the MegaETH ICO details. That's the one I'm really excited for because there is a lot to unpack. I think it's interesting how they structure that. And then I want to get towards the end of the show into A16Z's report, State of Crypto, to talk a bit about some of the stats, some of the stablecoin adoption that A16Z has been pointing out as a part of that report. Getting to the NFT price action. Let me get that back up on screen. That is the wrong button. This looks horrible. No, this also looks horrible. Struggling around today a bit. Yeah, it doesn't matter. Need to adjust my window size. There we go. This looks nicer again. Alrighty, sorry for that. We have Pudgy Penguins being down 1% at a 7 ETH floor. Bored Apes also down 1%, 7.17. Miladies moving against the trend. They are up 3%. Moonbirds, they had a bit of an announcement, up 5%, 2.75 ETH floor there. Azukis are flat on the day, 1.36 ETH floor, but nothing too major going on the NFT side of things. Also, in terms of the NFT strategies, I saw Rodo, also a good friend, listener of the show, shout out to him, posting that there is a new strategy coming out, and I think it's also going to have airdrops for punks, pudgies, other NFTs as well, where you have to sign up for that. It's called Macro Strategy. It has also the MSTR ticker. Need to look into that to see how that works more, and also to see when we need to sign up for that to get the airdrop. And then moving on to the Web3 Roundup to get you some other news from around the space. First of which is Hyperliquid. Hyperliquid Strategies files for S1 with the SEC to raise up to a bill through a 160 mil share offering, with part of the proceeds to be used for potential Hype token purchases. Definitely also one of the reasons why we see Hype moving so aggressively on the day. Not only a good day for Hype, also a good day for BNB. with Robinhood listing BNB. I think also it was either Polymarket or Kalshi getting BNB support as well. On the ETF side of things, we've seen reported last week on a rather red week. This week, however, started really good with a total net inflow of 477 mil on Monday, while none of the 12 ETFs saw a net outflow. Also for spot ETH ETFs, total net inflow of 142 mil. So definitely good news coming out of the ETF side of things, where while the majors are a bit choppy up and down, the ETF flows have resumed. There is buy pressure there. And then it's a bit of a controversy or a bit of like pushback to Jesse Pollock from Base sharing more and more creator coins, and some of the people saying that this ticker posting is going a bit too far. With that being said, Phunky, anything that's standing out to you from the roundup or anything else that's catching your interest at the moment that you want to touch on?
No, I didn't know about Jesse Pollock and the tickers that he's been tweeting. I don't follow him, so I don't know. But what's so controversial about it? Just that he's constantly referencing them, and then they're pumping and dumping, or what's happening there?
Yeah, they are pumping and dumping in very rapid succession, and some people have been criticizing and saying that this is taking it too far.
Yeah, I mean, if you're the ostensible face of Base, right? I mean, we look at Brian Armstrong as sort of the guy for Coinbase, and Jesse more so on the Base side. I could see why that would be a cause for concern for sure.
Yeah, fair enough. What do you make of the Hyperliquid?
Oh, that was great to wake up. Now, the thing I did make me wonder though, it says potential. Like if you read the post, it says that they're going to offer this, the 160 million shares to raise $1 billion for a potential buy. That's a little alarming. Like you would think it'd be better if it just said that that was going to be expressly what that money being raised is to buy hype and put it into, some kind of DAT. But yeah, that was the only thing I found alarming, but I'm happy for the price action, mainly for selfish reasons, because my PRJX pools were a little lopsided on both my ETH and BTC to where I was like getting so close to being out of range. So I'm sure that the pump helped bring it back into range. But the more I think about Hyperliquid, as a long-term hold, the more comfortable I am, in terms of, even if my pool goes out of range and I'm still in the K hype stuff, I'm like, I don't care, right? Like I feel that this is, where I started DCAing in. Admittedly, should have done it in April when you guys are like talking about it all the time on the show, when it was in that $9 to $11 range and kept bouncing around. And I started DCAing in probably like in the 20s, but I feel like that it's something worth probably having an allocation in your portfolio long term, just because of just the ambitions of Jeff and the team. When you see, I saw a clip of him yesterday saying how he wants Hyperliquid to be basically all of on-chain finance, and that much of trading is a very antiquated system, which he's not wrong, right? I mean, most of the tech that goes beyond even what we consider high frequency trading is now 20 years old, right? It was like the early 2000s when this stuff started becoming quite commonplace. And he's saying that DeFi is sort of the next innovation in terms of the, how to do and conduct these trades. There was just a post the other day where Jurgensen from Centrifuge was saying, like, in the next 5 years, so many of the things that are traded with velocity and frequency are all going to happen on chain. And I've said before on the show, I think that this is going to be accelerated by the fact that we have AI that's going to help hasten some of these innovations and improvements. So I think, Hyperliquid is probably an important corner. Again, not financial advice, of course, but like for me, I feel like it's going to become sort of a cornerstone in the portfolio along with BTC. And, just I'm more comfortable in the majors in general. So, I feel like this, and it's certainly has earned its status there, even though it's only been, relatively short amount of time as a tradable token. Granted, the testnet and everything else goes back almost 3 years. So the tech is quite battle proven at this point.
Yeah, very, very good perspective. Just to give a couple more details from the filing. So as we said, Hyperliquid Strategies has filed for a $1 billion IPO to acquire more hype tokens. The company plans to stake a portion of its hype tokens to generate ongoing rewards. They currently do manage 12.6 million hype tokens and 305 million cash. IPO is the result of a reverse merger, which we're seeing more and more often, between Summit Biotherapeutics and Rorschach LLC. Phunky, I saw you
Oh,
reacting.
well, I didn't realize it was that sonnet. So when the first time we talked about the Hyperliquid dads, when Brett brought it up and he mentioned the two, I aped into both, and the sonnet has done much better. So now I'm wondering on this news, like what that means for that ticker. So I just got all excited when I realized it was that.
Yeah, probably means good things for that. But I finally sold. I finally capitulated on my ETH treasury trade. Accepted the loss, accepted the defeat on that, which was, what's the second largest ETH one? Not Tom Lee's, but the other one. I even forgot the name, to be honest.
SBET.
SBET, thank you. Yeah, I accepted defeat on that. There's also, by the way, and we're going to get into this, there's also a section in A16Z's report on what they think on the whole that stuff. But before we do that, we have two other headlines to get to. So let's start with the first one, which is to do with the US debt. It hit $38 trillion in debt. It's the fastest accumulation of an additional trillion outside of the pandemic. I think there was some more details on that. Yes, on in the Kobesi letter, saying this marks a $500 billion jump this month alone. It is roughly $23 billion per day of additional debt which the US is incurring. And as a part of that, the government accountability office outlines some of the impacts that comes by an article on AP News of rising government debt on American, higher borrowing costs for things like mortgages, cars, low wages from businesses having less money available to invest, more expensive goods and services. Trump administration, sorry for that, says its policies are helping to slow government spending and will shrink the nation's massive deficit. There's an analysis by the Treasury Department that states that from April to September, the cumulative deficit totaled to 468 bill. And Treasury Secretary Scott Bessent had a post on X on that saying that this is the lowest reading since 2019. Quote is, during his first 8 months in office, President Trump has reduced the deficit by 350 bill compared to the same period in 2024 by cutting spending and boosting revenue. That comes via the White House spokesman. So this is the everything on the debt side. Now I want to put that together with two more pieces of information, one of which is also coming from the Kobesi letters. So we had a red day for the S&P 500 yesterday, just on 1%, but that was enough to basically nudge the fear and greed index over from fear straight into extreme fear. Also, if we look at the pre-markets on CNN, basically everything is flat on the pre-markets, just down 10 to 20 bips, nothing relevant. But the market is driven by fear. It's very, very close to get to the extreme fear level. And the Kobesi letter is making the point that 1% down, extreme fear. This is not the type of activity that you see before a market crash. And the other thing, the second piece of information that I want to tie in with that is polymarket US recession by the end of 2026. Absolutely no relevant volume on that. There's just 7K in volume on that. They see it at a 40% chance to see the US sliding into a recession by the end of 2026. Now, the more relevant market on that is also US recession in 2025, 10 million volume on that. There's basically no chance of that happening. Market is currently at 6%. But the interesting thing here is not the 6% where it's currently at. It is how volatile this has been throughout the year. and especially the peaks in April and in May, when we had like the first tariff war going on, and the market was very much shocked by that. The S&P did go down um, a very large amount. These odds went as high as 65, 66% on Polymarket. So yet again, a sign of how, I would say, almost nervous the market is reacting to moves at the moment, and how not only this Polymarket market, but also the Fear and Greed Index are reflecting that. With that being said, Phunky, what do you make out of all this information?
We don't know anything. I mean, that's the clear thing, first and foremost, right? I mean, as much as you go back to the beginning of the year, the tariffs, when they started in the
Yeah.
spring, you see it right there in the poly market chart, ripping straight up a wall. And, everybody, I mean, I had so many people who were just insistent upon the fact that we're entering a recession. Meanwhile, every single macro indicator does not show that, right? I think that Julian from Real Vision, that works with Rob Hall, has done some excellent long form posts the last several weeks talking about these various indicators and how we're not touching any of them. We're nowhere near any of them. We're about to enter a rate cutting cycle, which this morning in the Modern Market Telegram chat, I dropped this great post where it was, I don't know who the account was, it just kind of went viral, but he was pointing out that there's $7.4 trillion in money market funds right now, just cash that's sitting there effectively waiting to be deployed in risk on assets. And he shows historically when the Fed start cutting rates, what happened, when it was 1.2 trillion or whatever the number was, 1.3 trillion in 1998, and they start cutting rates and it ignites the dot-com bubble, and then 2003, they drop rates again. And all of a sudden it's the housing bubble. And every single time what you see is that once it really goes risk on, all these things just go to the moon, literally. And so I don't see, the 2026, that is over a year away. That is not anytime soon. We've talked many times on the show that we think it's probably going to be risk on at least through the midterms. That's next November, right? If we do see a sustained rate cut cycle happening throughout 2026, I feel things are going to get silly. It's going to probably sort of, especially put the nail in the coffin of the whole 4-year cycle thing. And if nothing else, I think I've seen some other posts where it just shows the cycles do kind of time with just macro liquidity across the entire globe. So, I mean, is it something that we were kind of putting that perception on the Bitcoin halving because of it was so well timed with some of those macro liquidity events, whether that was contraction or expansion? So, yeah, I mean, I feel like it's just exciting times. Now, that being said, the debt thing, I think, is just the 38 trillion. People don't seem to flinch at that very much anymore, right? Yes, it is an alarming number, but you could see how Besant was quick to come and sort of massage the numbers and talk about how they are something that, well, if you put it in the proper context, we're actually reducing the deficit, even though it looks like we're spending more. I thought it was hilarious in the article that it was $69,713 per second, so close to 69,420. But I'll never forget, especially to give some context for the younger listeners, from the 50-year-old in the room. When I was in 9th or 10th grade, and I had this history teacher for 2 years in a row, so I can't remember if this was 1990 or 1991, but I remember him reading the paper, and it was on the headline that day was that the U.S. debt had hit $1 trillion. That was only like 30 some years ago. And we've basically more than 30x that. And he was so upset and furious. And I didn't understand as a teenager at the time. Like, he was just like, he literally was like pounding the desk in the newspaper. He's like, I can't believe we're $1 trillion in debt. This country makes too much money. How can we be so far in debt? And now, it's like, what's another trillion on the pile? Like, it doesn't even seem to flinch us or scare markets or anything.
Yeah, that's all very, very good context. I also remember that from my parents growing up. When I was a kid, they were saying when they grew up, successful countries did not have debt. They actually had a surplus, and this has gone away. The thing to me is that we have no idea how this debt cycle will play out globally. Like, it's impossible to say if this financial system will carry on like that, and the modern market in 20 years from now will talk about 247 trillion. in US debt, and nobody will care about that because all of these numbers are getting so ridiculous. Or if at one point the system will implode. However, in either case, there's like nothing I can do about that. So I can't really like worry about that on a day-to-day basis. Plus the horizon gets so abstract on anything that happens beyond the 3 months timeline, which we like to mention on the show quite a lot. So I have no clue what the US is going to do in 2026. I have no clue what the markets are even doing right now. That's also something that a lot of traders have voiced on the timeline. But what I do think is that the rest of this year still has some very interesting opportunities waiting for us. Has some very interesting TGEs. November is packed with tokens coming to market. So the thing that I can focus on is to try to make the most out of that. But I wouldn't dare to say if the US is sliding into recession in 2026 or not. That is absolutely out of my scope to predict and also not really relevant for my portfolio. And I assume it's the same for you. You don't make any portfolio adjustments based on these odds or debt numbers, right?
No, I mean, obviously, just being primarily in Bitcoin, not too concerned up and to the right. We'll probably get into that when we talk about the A16Z report, and now doing a lot to farm with stables, because I feel like just you take a lot of that volatility out of the equation, and you have so many, to your point, opportunities that we're going to be able to deploy into in the coming months.
Sounds good. Let's get into the next headline. Let's get into the big one to take a look and dissect what's going on with MegaETH, with the public sale details. And there's quite a lot to talk about. Starting with the facts, with basics first. So total token supply, 10 billion tokens. We're talking about a sale for 500 mil tokens, which is 5% of the total supply to be carried out on ETH mainnet, USDT Tether being the currency which is going to be used to deposit. There is a minimum bid amount. It's going to be an English auction. The min bid is 2.65K, and the max bid is $186,282, which is the speed of light in vacuum in miles per hour. If they would have used hour units, kilometers per hour, not freedom units, we could have deposited more than 186K. We could have deposited more than 300K. But I like the nerdy choice of number. It's an English auction with a ceiling price. Starts at 1 mil FTV, goes all the way up to 999 mil FTV. There's a lockup if you are a participant from the US, you're a US accredited investor, which you need to be to participate. Then you are mandated a 1-year lockup with a 10% discount. The lockup is optional for non-US participants. So if you're not from the US, you can choose to lock up your tokens to get this discount, but you don't have to. A couple more bits from the official announcement on the MegaETH account on X. They're saying it's the first real-time blockchain. It's built for you. It's priced by you. Public sale is happening on Sonar by Echo now, having been purchased by Coinbase. As we said, starts at 1 million FTV. They did partner with Echo last year to host the largest sale on the platform, brought in 3,000 investors on the same terms as Dragonfly, Joseph Lubin, and Vitalik. Round 2, this time you decide the terms, and then they break down all of the details. There's also an article, which we'll get to in a bit, that explains what happens if the sale were to be oversubscribed. And now the thing is, if you look at Hyperliquid, where Mega is already trading on the pre-markets, it's trading at 50 cents. That means it's trading at 5 bill FTV. That is of $19 million in 24-hour volume and $5 million in open interest. So basically, the pre-markets already see it at a 5x of the max cap. So for me, it's absolutely impossible to imagine that this is not going to end up being massively oversubscribed, and it's obviously going to go all the way to the 999 mil FTV. I want to get into the article to break down some more thoughts of Mega's MegaETH's approach to oversubscription, to the sale in general. But before I do that, I'll quickly catch my breath, Phunky, and go to you to get your first initial thoughts or reaction on the sale announcement.
Yeah, I mean, I love the idea, just the way they're going about it. I felt I didn't understand what an English auction was. Then shout out to the Modern Market chat where people were able to kind of educate me on exactly what an English auction was, because I'd never heard of that before. I completely concur with you insofar as I think this thing is going to hit sort of the max and people are going to, have their allocations reduced. I also like how, I'm sure you do too, that they went and prioritized NFT holders like Bad Buns, right? Like there are many community members who have been, rocking those things as PFPs for a very long time. No one, of course, can touch the king when it comes to 69 Bad Buns. But I love that they're, recognizing sort of a community-led initiative because, of course, like MegaETH as a chain isn't out yet. So those live on ETH mainnet. And then, there's people who are supporting them. So I thought that was really cool. Of course, as a US guy, I don't love the lockup, but I also see it as a need, a requirement, because this is sort of just even if you are an accredited investor, it's one of these things that is probably the prudent decision to make, considering, we're working toward an SEC that gives us these kinds of things, the clarity around these issues to where, hopefully in the future, maybe in a couple more years, US investors won't have to take these lockups and they will be able to access them like everyone else in the world, basically. Although there were some other countries, I think, that were carved out as well for exceptions in terms of their ability to participate. So yeah, I'm just happy for the MegaETH team. Been a long time fan. I did have my hat. So make Ethereum great again for the MegaETH hat, which I got at ETH Denver. Brett had forgotten that I even had the hat. So because I went to the MegaETH, they had this really cool vault in Denver, and so I got that. I did not get the cool posters that Sammy hung up, but yeah, I'm really excited for the team. I think that they're building something that is as much as they focus on 0 to 1 app developers with the Mega Mafia, I think that this is a 0 to 1 chain, right? It's so unique. It's so different. I'm sure some people have used the testnet, played the little fluffle hoppy game and stuff like that. And I'm just really excited for their launch and everything else. And it's a lot of really, really smart people who are behind this thing. If you didn't, I'm sure you have, but if others haven't really looked into Yilong and Lei's background, Stanford, MIT, and just sort of the way that they came about looking at this and coming up with a very novel way to recreate the architecture of a blockchain. It's really cool stuff that they're doing.
Yeah, very much agree with that. And since you mentioned other jurisdictions and a couple more details, maybe let's flip it around and let me get through some of the frequently asked questions first, because there's been a couple interesting bits in there which I think some people might have missed. Let me get that up on screen as well. There we go. So as we said, to be eligible, you need to KYC through Sonar. MegaETH employees are excluded from the sale. US resident, you are mandated to do the 1-year lockup. Other countries can't participate in the sale at all. That also includes the UK, who cannot participate in this pre-sale. Then the question, how many wallets can you use? There is only one wallet address that is permitted to participate in the sale. And that's also the wallet that undergoes fraud and AML screening on Sonar. And then there's the additional wallets that have rich on-chain history that will help with your chance of receiving a location when oversubscription happens. That for me is an important distinction there, because I had it with one echo sale that I couldn't participate because my wallet failed at the AML screening, simply because it was a wallet that was depositing into online casinos to do a bit of gambling. And it happens to be that is a wallet that has rich history. So I want to use it as an additional wallet to basically increase and further my chances to get a good allocation. And from what it reads here is that only the address that is participating in the sale is the one who undergoes the screening, and the other ones can be a bit more degen as wallets. And also keep in mind, like if you use privacy mixes and stuff, it's also very likely that these wallets would then pop up in an AML check. To the other questions, we said Tether on ETH mainnet already. Allocations are not guaranteed. We're going to get into the oversubscription methodology in a bit. You can withdraw the bids after the allocation calculation period. They have a timeline explaining that. I think you have 2 weeks time if you don't like your allocation, if you want your funds back, to claim them back. Just kind of a nice insurance. Like, you could run into a situation where for whatever reason something happens with MegaETH, you see they trade at 300 mil on Hyperliquid, and you're like, nope, I want to back out. So you do have this option as well. And then the two interesting questions right at the bottom: what is the role of Mega? That I found interesting. There are multiple dimensions of the Mega token, ranging from a core primitive that powers economic systems around leader rotation and collocation to a store of value that is accumulated by the protocol. Specifically, that collocation part I found interesting to find out what that means. It also says that they will have more details on that ahead of the sale date. So I would definitely want to understand a bit more of Mega's token utility, because it doesn't read like the default, yeah, it's just a token that we have and we do a bit of governance with it. And then a question that I've also seen many people asking on the timeline: what about the second Fluffles drop? So Fluffles were the soulbound tokens, which you could purchase. And initially it was planned to do 2 sales of 5K, but they are now specifying that no further NFTs beyond the original 5K will be sold. And they're also mentioning a rewards campaign. So together, the public sale and the rewards campaign present what would have been the second Fluffle drop, an opportunity to get additional skin in the game by engaging with the ecosystem, which is also telling that apart from the public sale, is going to be another campaign that allows you, or will allow you, to get exposure to MegaETH if you wanted so. And then getting into this article that shares more on the thinking on the oversubscription, on the sale per se. So I want to pick some of the bits out here. They are saying that, or Namik is saying that they believe that there are 3 buckets of stakeholders: the mega investors, so people who believe in Mega Labs' thesis in designing the protocol, building the best execution layer for crypto by centralizing block production and decentralizing block validation. Users, people who just want to use the protocol directly or indirectly, even without token incentives. And then the last part, caps lock, users who also want to be investors, so people who use the protocol, like it, and choose to become active investors in the Mega token. They say that this model has played out before in Web 2 and reference Reddit. Reddit raised money from VCs, but it also had millions of users who used it with no expectation of profit. And as Reddit prepared for its IPO, they offered a directed share allocation to subreddit moderators, power users at the IPO price, alongside institutional investors, which Balaji described as a DAO of sorts. And that is a story that they kept in mind. Obviously, with Mega, they discuss a token and not equity in the company, but they like this Reddit model and try something similar with MegaETH. They did raise, as we said, from investors such as Dragonfly, but also angels like Vitalik, alongside more than 3K Echo users. Then they had the Fluffles at the first attempt to curate the investor base by filtering for people who wanted to buy Mega, who shared the values. And then I'm going to skip through that. They get into the bit which I find the most interesting, because it touches on the oversubscription and how they want to handle that. And then they're saying if the sale is oversubscribed at the clearing price, there's a U-shaped allocation system which will be used to prioritize broad distribution while rewarding key contributors. U-shaped allocation process ensures broad token distribution while prioritizing the key contributors. MegaETH and Ethereum core supporters receive priority allocation, while at least 5,000 participants receive baseline allocations starting at 2.65K US dollars. They have a chart there that shows you will have the one side of it, the community floor, where a lot of people will receive a min allocation. Then you have like this bottom part, the middle part of the U. And then you have the right curve of it, where you will have a few users, the Ethereum and MegaETH, who contributed to ETH and MegaETH, who will receive larger allocations. They're explaining that there's two things to look at: depth. Prioritized fills go to participants who've already contributed towards the development of growth of MegaETH and or Ethereum. We'll get into that and what that means in a second. And then breadth, the community floor, majority of users will receive smaller fills to maximize unique holders and true community distributions. So now, what public signals are they looking at when it comes to identifying if you will get a larger allocation? You mentioned one of them already, Phunky, MegaETH culture, which is proliferation ownership of mega-originated cultural icons: Fibonacci, Fluffle NFTs, Bredio, Bad Buns, Megalio, Lemonheads, et Altera. Vocal supporters, so people who link the wallets to Twitter and Discord that consistently advocate for the fundamentals of MegaETH. They explicitly say that they will leverage their Kaito leaderboard for that. Then, and that's the interesting one. That's the one where I think it pays off if you have a ton of wallets to think through which fits this part the best. On-chain exploration. So addresses that have dared to fuck around and find out, ape in, are chronically on-chain with a bias towards early use and consistency. Extra brownie points for being among the first 5,000 users to interact with contracts that gained real traction, such as but not limited to Compound, ENS, Uniswap, Curve, Aave, Lido, Pendle, OpenSea, Stargate, Eigenlayer, and Ethena. And also wallets which meaningfully participated in Ethereum DeFi. A recent example being Cap Money, stablecoin program deposits, as well as dope NFT ownership, which to them is CryptoPunks, Autoglyphs, Fidenzas, Hyper, Pudgies, Coins by Lara Labs, Miladies, and Yappy Bars. So quite a lot to digest there. I think one important note, which has been mentioned somewhere else, is that snapshots have been taken. We've seen it, I think, yesterday, that some people aped into Bad Buns, pumped the floor to 0.48, to 0.4 ETH, and digested the news and sold that off again. So there's no point in trying to collect these brownie points now. The only strategy which you can apply is to think which wallets you want to link, because you can't link an infinite amount of wallets in there. So you will have to be strategic about that. With that being said, I've went on for quite a long while to break this article down. I definitely want to get to you, Phunky, to see what you're making of this.
I think they put a lot of thought and effort into this, and I kudos to the team again for being able to think of the cultural landscape in particular. I like the U-shaped model. That's really interesting. I've never seen anything like that, and I could see how they're going, just the breadth, but also the depth for the people that have contributed the most, and so on and so forth. It's really, really neat. The thing, I'm still stuck on the token, especially for those who listen to the show and know Bread, and he said this in the chat, he's bearish utility tokens. And so knowing that he is a key core member of the team, I'm wondering how much influence he has on what the token is going to do. In particular, especially as a data center infrastructure provider, the thing that I was really curious about is where he referenced co-location and leader, because for those who don't know the more technical infrastructure for MegaETH, unlike most L2s where you just have a centralized sequencer that does everything and effectively prints money down to, from ETH mainnet, they have made the very bold choice of having a rotational sequencer so that others take the lead, if you will, and generate, the blocks, as they talked about. Sort of, it's the centralization of the block production, but not the validation, because there's other nodes in the network that do some other pieces. So really kind of curious, especially as an infrastructure provider that is very keen to be involved with MegaETH, what that's going to look like, how the token will also be used for, incentives in the ecosystem. So yeah, just knowing that Bread's involved and the comments he makes about just sort of, generic utility tokens or how they don't often accrue value, I'm really keen to see that, because as an American who is an accredited investor, like I could pass the smell test, but the thing I was leery about was the lockup. But if the token itself is going to have something that will allow for value capture and accrual, that's a very different ballgame, and maybe it's something that it's worth considering to have that. Okay, well, I'm locking up my tokens for a year, but if this is a great long-term project, which I'm sure it will be, just because especially it is so unique, and knowing the way that they've curated the Mega Mafia to have these 0 to 1 apps, it really could be quite meaningful. So a lot to unpack there, but that's what's at top of mind for me in terms of just like thinking about Bread, his previous comments, and just knowing that team is full of very smart people. I'm really curious to see what they will divulge about the token in due time, and it's making me really reconsider the lockup.
Yeah, all very good points. There's been so many more posts by the team which had additional bits and bobs of information, and I'm also really curious to see more of what the token will be used for. Unsurprisingly, I will participate in the sale when it comes to my personal strategy for that. I do have a good amount of bad buns. I am quite high on the Kaito leaderboard, so I hope to get a nice allocation there. One more question maybe on that. What do you make of the pre-markets trading it at 5 bill and Monad trading? I think it's 7 or so when I last checked on that. Do you think this is a good range? Are the two comparable to one another? Or yeah, what are your thoughts on the pre-market trading?
I mean, I think when you take into consideration that both of them are going to be known for their speed of execution, right? They're similar in that one sense. I feel that they're both certainly within range, right? Like when you think about Monad in the sense that, it's a VC darling. The chain has been up and coming and being talked about for a long time, right? Like here we are on the precipice of the actual TGE, but literally in the bear market, we were talking about this thing, right? This has been something that's been on a lot of people's minds since at least 2022. So I feel like MegaETH maybe has a little bit more of the energy right now because it has done such a good job in curating sort of that real grassroots community, and just being able to, whereas look at how people were upset with the Monad checker, right? Because there were people who had been farmers on the testnet probably for years, and they felt very jaded because they weren't included. I want to, Chris and Steve had a great conversation about this on Coffee with Captain about just, you really want to reward real community, or do you want to reward just people who are like, have tons of bots and they're just farming your thing because they want to get an airdrop it and dump it and move on. Whereas MegaETH clearly is thinking about making sure that these token holders become a long-term member of the community, like the way that they have the breakdown for those who are really looking into being part of the investment and getting an allocation. So again, I just feel like MegaETH is, it's my personal opinion, just a much more thoughtful team in the way that they're going about this and approaching this important step and milestone in their evolution, and bringing the wider community. And of course, I'm really excited just to have any kind of allocation being a Fluffle holder. And if I were to change my mind, I would likely like make that my wallet that I would apply and just, funds, especially to your point, because you can add other wallets that maybe show that rich history, or, to kind of just show your previous on-chain activity and so on and so forth. I can't imagine, I've never touched a mixer in my life. So, I mean, I can't imagine that I'd have any issue with my wallets or anything like that. But yeah, I feel like they're both reasonable valuations, especially in today's, for any chain that gets a ton of hype. I feel like that they're both probably right around there, and hopefully they stay right in these ranges, because then, like you said, it's pretty much, if it goes to the full, you're still talking about a 5x easy.
Yeah, very, very good comments. Just once more, a reminder, none of that is financial advice. Obviously, we are biased. Brett is a big part of the show. He is with us 3 times a week. So we are positively biased towards him. Just keep that in mind as well while we're speaking about MegaETH. Got a couple minutes left in the show. There's 2 more things to do. I want to touch on the A16Z report. But before we do that, let's get to the giveaway for today in partnership with Beezie. And we are giving away a couple of vouchers, giving away 3 vouchers on the show today for the OpenSea Explorer Claw, which they have, where there is a series of collectibles in there, including some of the highlights which I like. A base set, a Charizard in PSA 8. There is a Dark Charizard, which I recently actually have collected. Also 25-year-old card by now. One of the most beautiful Mews is in there as well. Bunch of other cards, not only Pokemon cards, some sealed products as well. Labubus. I think the Labubus are gone by now. So still very, very nice slabs to be had. With that being said, let me head over to our wheel of names, put everyone in there who signed up using our referral code for Beezie, which I'm going to put in the comments in a second. Just going to spin the wheel to see who our first winner is. I like the wheel spinning. There we go. This looks like it's going to move over. Yes, it is. First is Grail Hunter 324763. I'm going to remove all instances of that name. Go to the second spin, which is going to be Benny. Yeah, it's going to stop for Benny. Congrats to Benny for winning our second voucher. And then last but not least, third spin, get that off the way as well. This looks like it's going to stop for JLo. I'm used to seeing the wheel, so I can already predict where it's going to stop. And this is our third winner. Congrats to you as well. As I said, I'm going to post the Beezie sign-up link. It's not the last giveaway that we're going to do with them in the comments, so make sure you're signed up for that as well. That being said, let's move over to the last part for the show of the day, which is A16Z's State of Crypto 2025 report, which they headline as the year where crypto went mainstream. Some of the key highlights which they're picking up on is the story of crypto in 2025 is one of industry maturation. In short, crypto grew up. You have traditional financial incumbents like Visa, BlackRock, Fidelity, JP Morgan Chase, tech native challenges like PayPal, Stripe, Robinhood, who are offering or launching crypto products. Blockchains now process over 3.4K transactions per second. That is 100x growth in the last 5 years. And stablecoins power 46 trillion, $9 trillion adjusted in annual transactions, rivaling both Visa and PayPal. And over 175 bill sets in Bitcoin and Ethereum exchange traded products. So definitely also a success story for the ETFs. World's coming on chain, crypto stronger than ever in the United States. Blockchain infrastructure is almost ready for prime time, and crypto and AI are converging. Two more, gonna probably go a couple minutes over because I want to go through some charts as well. A16Z is still very much talking about cycles and that the crypto market develops in cycles. Feedback loop between prices, developers, and users exists. First, the ICO boom, then DeFi summer NFT surge, then Bitcoin ETF, then meme coin mania, and now the next driver being regulatory shift and stablecoins. A16Z also estimates number of monthly crypto users, monthly active crypto users, has grown anywhere between 40 and 70 million. And in terms of capturing real economic value, they're saying Solana and Hyperliquid are capturing the majority of real economic value. There's a big shift from Bitcoin's and Ethereum's dominance in the past. And then it's really interesting report. We won't have the time to go through all of that. I want to specifically pick out two more charts from the stablecoin side of things, saying that stablecoins are now rivaling the world's largest payment networks in transaction volume. You have PayPal at 1.7 trillion, Visa at 16 trillion, and stablecoins at $46 trillion. And the other interesting thing is that stablecoins are breaking the correlation with broader trading volumes, which you can see in this chart, where you have a purple line that basically shows that since 2024, stablecoin transaction volume has been growing massively, while there's also been periods where the spot crypto trading volume has oscillated quite a bit, gone up, gone down, but these two are decoupling. And then the last chart that I want to share is that stablecoins, and we talked about that on the show, are already a top 20 holder of US treasuries ahead of Saudi Arabia, South Korea, Israel, and Germany. And that stablecoins can also strengthen dollar dominance, which is something we've spoken a ton about on the show from the strategic perspective of the Trump administration. Phunky, definitely want to get your thoughts on that. What you are taking away from this report? Again, there's many more things in there, the convergence of AI and crypto, which we don't have the time to get in, but really want to get your perspective on that, and then we're going to close it up for the day.
Yeah, I mean, I would just start off by encouraging anybody who's listening or watching the show today to read this report. I read it yesterday afternoon. David, my colleague and friend, brought it up, and he dropped it in our Slack. And it's quite illuminating when you take everything into consideration. Again, the stablecoin dominance thing, it's not surprising at all. I mean, both in terms of just as I've said on the show before, a year ago, Senator Bill Haggerty was at the BA summit talking about how the first thing we will make sure legislation has is stable coins and regulation around that. And we had the Genius Act. And so, you know, there are many, William E. Quigley was on our podcast. He's seen clips where he basically says this is, stable coins are the next greatest invention since paper money, and that blockchain was really made for stablecoin more than anything else. In fact, last night I was delivering a webinar to other teachers as part of my side work as the Art and Blockchain Education Liaison, and it was about blockchain and cybersecurity. And I was talking about use cases for blockchain, the things that people don't realize. And just, stable coins is probably the number one thing, which all the charts are showing, right? Just sort of the organic demand, the fact that it's rivaling PayPal and Visa is absolutely astonishing when you put it into context. I think sometimes we think about stable coins like, yeah, it's not a big deal. But when you think about, for instance, in the developing world, how much these things are used, right? I mean, and in most developing countries, people leapfrog technology. They're not accessing things on a desktop or a laptop. They have a phone. I mean, we've talked about on the show before where you can go into Argentina and grocery stores and pay for things in Tether. You can just USDT. And so to the point about sort of continuing that hegemony of the global reserve being the USD and having people denominate things in that and being able to just pay for stuff. So to get back to bread, the infinite institutional bid is here, and it's really just starting. And I think it's only going to continue to accelerate. And with crypto adoption, I think that's something that the report does a very good job elucidating, and with a lot of facts and figures and charts. And again, for anybody who hasn't had the chance to look it over, do so. It's quite good. And I'm really excited now to go to the BA summit because we're going to go back this year with my work at Ardent, because A16Z had a big, heavy presence at the BA summit. So be keen to interface with some of these folks and talk about the report, being dropped just, 6 weeks earlier, or whatever it's going to be.
Awesome. Phunky, thank you so much for co-hosting the show with me today. That brings us to an end for the Modern Market today, but we're going to be back same time, same place, 7 a.m. Eastern time as usual on X Spaces, X Video, YouTube. And we're going to upload this episode, just as every episode, to Spotify and Apple Music. Going to have clips out as well. In the meantime, have a great day and see you back tomorrow to close out the week on the Modern Market.